Hello, crypto world. Welcome to the Chart Historian. My name is Justin, and on this channel, I delve deep into crypto charts, exploring chart structures, fractals, and patterns. So in this video, I'm going to do something a little different. I'm going to talk about the year-over-year U.S. inflation rate. Now, this is not crypto, but I do believe that you'll find this interesting, so bear with me. The reason why I'm making this is because I feel it is my duty to ring the alarm bells, as I believe we are approaching what I am calling an economic hurricane. It is my belief that in the near future, I don't know timing, but I do know it is near, we are going to see some turbulent times. So I want to start with the US inflation rate. Now, I'm going to do a series of videos on some of these different charts. I'm going to put it in a playlist, so you're welcome to go back and view some of these videos in sequential order if you wish, once they're out. So like I said, this is the US inflation rate. This is put out by the Bureau of Labor Statistics. It is my, I won't say belief, but I think this chart is repetitive. This is a big picture. It starts in 1915 and it goes to present. However, if you, bring it to life with some boxes and some fractals, we'll see that this is potentially repeating. So from the first box, we see that it starts in 1915 and it goes roughly to 1955-ish. From 1955 to roughly 2000 and what is that, 6 or 7, it does box 2, and then this is where I believe, or I think, it is repeating once again. Now, when a structure or a fractal repeats, the timing, the height, and the depth, all those are going to be original to the new iteration. So while the basic idea, the basic pattern copies over, the timing of it is going to be different, the height of it is going to be different, the depth is going to be different. So that allows for some novelty in the structure that is repeating. And this is what we see on this chart. So in the beginning here, we have this first bounce, which is very large, whereas the second time it repeats, it's much smaller. So that is within the basic idea of a repeating structure. Now, there are several bounces that have already, at least I think, have repeated. This first one, second one, third one, and fourth. So we see that they look different, but they basically do the same idea. And all it takes is for the basic concept, the basic idea to repeat. And that's exactly what we see happening. So that leads me to believe that this is repeating. And if it just continues to do what it's going to do, that can mean we have potentially some very interesting days ahead of us when it comes to the US inflation rate. Let's zoom in over here on this box. Here's a closer look at the basic pattern, and as you can see, it is following the basic idea. Now, on today's chart, it did not drop, for instance, as low as it originally did with this fractal, but once again, the timing, height, and depth, all that is going to be original. This was the C19 when essentially the supply chains of the world came to a crashing halt, and this is what we got. We got some pretty intense inflation. Well, folks, we have come down from that, and we are now working through a trough, if you will, and it's really doing exactly what it should be doing. With this latest decline in inflation, that's exactly what should be happening per this structure. Well, if it continues to follow this structure, we got some challenging, interesting days ahead. And this is why I feel it's important to start ringing the bell, letting you guys know, with this type of technical analysis, it's unique. No one that I know of does this macro structure and the repetitive patterns that exist within the macro structure. So when I see something like this, it's my responsibility to tell you. Now, maybe it's not going to turn out like this. Maybe it will break from this pattern, but as we can see, no, that hasn't been the case. So it is probably better safe to assume that this, or some version of this, is what is coming down the pike, people. So if this continues to play out, and once again, I don't know timing, but this assumes that it continues to play out at this rate, at least time-wise. Now, that can change on a dime. So it could speed up, it could slow down. All that is very flexible and really impossible to predict. But if it was to continue playing out at the same basic speed, we could see inflation begin to drastically kind of pick up towards the end of this year. Again, timing could change on that. This is just an illustration that we potentially have some nasty inflation coming down the pike. It's being held back right now, but it's going to snap back potentially with a vengeance. Now, we don't know how high this will go. This is, once again, just an illustration. It could go less than this. It could go more than this. So the takeaway from this is that very soon, likely, we will start seeing a drastic, potentially drastic rise in year-over-year inflation. So that is the essence of this video. I want to warn you. Now, you don't have to believe this. You can cast it aside. That's fine with me. Or lodge it in the back of your mind and just kind of think about it. Regardless what you do, this is a potential reality. So far, it has followed this. I see no evidence as of now why it will randomly, suddenly stop. So there you have it, folks. We potentially have some crazy inflation. Now, what brings this on? I don't know. I don't know narratives. It'd be interesting to hear what you guys think of what could potentially trigger something like this. Before you say the dollar is going to crash, I'll quickly jump over to the US dollar index. So I've done many videos on the US dollar index. You can go back and see some of my other videos. It's actually been kind of a humbling thing trying to keep up with this chart, as it's been playing out, but just the timing, height, and depth has kind of thrown me curveballs. But nonetheless, you could see that this blue fractal is essentially this right here from 1985 to 2002. But even before that, you could see that it essentially does the same basic idea. It starts at a point, swings down, swings back up, kind of creating this bowl. So it comes to a peak and then does the same thing all over again. We're doing it once again. Now, this is on a large macro view. This is on a month candle. So this peak here, now peaks are really challenging to predict, but this peak has potential to play out for some time. Like, this is going, if it continues at this speed, into 2026. But eventually, we will see a long decline like we see here or here in the US dollar index. Let me zoom in here so you can get a better look at this. So here we are. This is the decline that's taking place. This is potentially very good for crypto. So we should enjoy this while it lasts, because it will start moving back up again. How long and how deep and how high this stuff goes, I don't know. This is just the basic idea. And once again, please remember that peaks, if I haven't told you before, peaks can be challenging to predict. So as of now, it's following this, but a peak is a wild place. You can see some deviations, but eventually it will ultimately decline and go into that long, protracted decline. So how that all correlates with what's going on here with inflation is yet to be seen. You know, I think it's worth noting that the DXY is really a comparison against other currencies. So if the DXY is registering as really strong and moving up, even though it's doing poorly, that really means it's doing better than the currencies it's comparing to, such as the euro or the yen or whatever it's being compared to. So in other words, if those other currencies are doing even worse, the DXY will register as being strong, even though it's being inflated to oblivion. Once again, I'm curious to see what you guys think, what could trigger something like this. Please put it down in the comments. And if you're new to my channel, it's important to note that I am not a perma-bear. I'm not looking for bearish activity under every rock and around every corner. I'm just voicing what I see potentially coming down the pike in the chart. Nothing more, nothing less. If you found this video helpful, it'd be much appreciated if you hit that thumbs up button. This is not financial advice. I'm not a financial advisor. But if you did enjoy this video and you're not yet a subscriber, I recommend hitting that subscribe button. I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.